Oh, look! The sun is once again positioned relative to Earth, indicating that every non-rich person in America must now personally calculate the amount of money they apparently owe to the world's richest, most powerful government.
Was that Shakespeare? I majored in theater.
Well, you're going to need Horton Tax Prep. Spend some of your hard-earned money on us, and we'll help you spend even more of your hard-earned money.
Oh, thank God.
God has nothing to do with this. My name is Roger.
Oh, sorry, Roger.
Horton Tax Prep may not be cheap, but neither is rotting away in a worm-infested debtor's prison for all of eternity. Something that almost certainly won't happen, but also something we'll constantly insinuate could happen. Our splashy website is absolutely flooded with incessant pop-ups promoting the Horton Turbo Deluxe Sexy Magic Low Calorie Edition filing option that we'll claim is fully guaranteed to keep you on the right side of the law and maximize your deductions. Even if you already qualify for a free return that'll give the exact same result.
Free?
Did I not mention that? Over half of Americans qualify to file online completely 100% for free, but good luck figuring out how. We don't mention it on our homepage, and we actively hide it from search results. Even if you do somehow stumble upon the thing we're legally required to offer, we'll accidentally cause arbitrary paywalls to appear somewhere in the middle of this hours-long process.
Pay $300 to continue for free?
Research tells us almost every single one of you would sacrifice your firstborn boy child if it meant not having to start over. And obviously, logging off and attempting to do money math on your own is completely out of the question. Your tiny monkey brains just can't handle it. It doesn't help we have an entire dark patterns team dedicated to fucking with your head. Dark patterns is a real term for intentional tricks websites and apps use to maneuver users into actions they don't intend, like accidentally spending more money or clicking on a service you don't want.
That sounds illegal.
Oh, look. Here are some funny animations of paper clips and squirrels and other assorted fun bullshit. They're combing through your return and looking for problems. That sure is helpful, right, Mr. Tax Walrus?
In reality, our calculations are made instantaneously. There's no reason to make people wait other than the longer they wait, the more terrified they become about this labyrinthian process apparently created by money goblins during the Dark Ages, and the more assured they become that our overpriced tax wizards, and only our overpriced tax wizards, will protect them.
Why does anybody care if my return has a couple of mistakes in it anyway? I mean, does the IRS really care about me? Shouldn't they be focused on billionaires and people whose tax dollars are actually significant?
Well, you'd think so, but it's a hell of a lot easier checking for mistakes on a minimum wage tax return than one with 7 figures. And thanks to several years of budget cuts, the IRS just doesn't have the money to go after people who have money. So instead, they're coming for you.
I don't understand why taxes have to be this hard at all. This is the 21st century. My 16-year-old entrepreneur nephew started a cryptocurrency business from his smart toaster.
Well, it's probably because Horton Tax Prep hands literally millions of dollars to government officials to ensure the tax filing process remains brutally complicated forever. But our platform makes filing easy.
It's actually not letting me file. Is that a glitch?
Oh, no. That's another fun dark pattern feature.
Sure is.
But don't worry, you can talk to one of our overpriced tax wizards right now.
Will they be able to help in a meaningful way?
Unlikely, but you can pay them out of your tax refund.
But I owe money.
Get used to it. So remember, this April, before you tear all your hair out calculating the best way to pay for not health care, file with Horton Tax Prep. Because if you could do it yourself or for free, what would you need us for? I'm Roger, by the way.
Roger. Thank you for the honesty. Finally, we get somebody letting us know how things really work. So yes, they're coming for your tax dollars. Believe it or not, they want it all, even though they make money out of thin air. What's up, you guys? Welcome to the vote. Today is January 16th, 2023, and we have an amazing day ahead of us. So today we are going to talk about the concept of how do you DCA in a bull market. Have you ever thought about, okay, prices are going up, you're not really quite sure if the dips are coming, and how do you strategically go about that process because you don't want to get left behind? Well, today we're going to tackle that issue. I'm really excited to talk about this because I remember some time ago when I was trying to figure out a strategy, a way to get this done effectively. And believe it or not, what if I told you that 9 times out of 10, when you try not to get it perfect, you end up getting it better. Like you end up getting a much better result than someone that's trying to do trigonometry every day, trying to be perfect when it comes to investing. So, but what I will say is consistency does help. So we'll talk about the main topic here in a bit. I appreciate those that are here today, checking out the stream. And yeah, I'm looking forward to just chopping it up. So let's get into it. Today, we'll start off with going through some basics and we'll just kind of put around and go from there. So one thing I want to do, I do want to take a look at briefly before we get started. I want to take a look and see what is this heat map looking like overall. So let's pull it up. We're taking a look at cryptocurrency heat map. So what we can see thus far today, Bitcoin up about 1.5%, Ethereum kind of outpacing still, kind of ever since that whole situation with the ETS launching, Ethereum now being one of those main narrative switcheroos of saying, hey, now there might be a chance for Ethereum ETF to come out. This is that capital rotation that we've talked about for months now, but we're starting to see a glimpse of what that looks like as far as Ethereum now rising to the top. And then, these altcoins will kind of trek alongside Ethereum as it makes its move versus Bitcoin. But nonetheless, we have Solana still pumping up 3.5%, give or take, over the last day. If we kind of zoom in on some of these in particular, we got some things rocking and rolling. If we want to just try to take a look at these that are a little bit more in the green. So, we got Render up about 5% over the last 24 hours. Let's see if we see something that is bright green. And nothing that is sticking out so far as something that's way up besides the post-chain ecosystem. As of today, it looks to be a pretty, sideways, choppy type, but, a little bit to the upside type day. We got Immutable X up about 3%, Thorchain up about 4%. So, no, nothing too crazy. We do have Clayton. Clayton is up about 17% today. We might have to, check and see what's going on over there. But we see more green than red, so overall positive day. One thing that's super helpful is to not only just look at the daily, but let's go ahead and take a look at how things are faring over the weekly time span, the monthly time span, and kind of go from there. So over the past week, we see that Bitcoin is kind of relaxing. So kind of giving some of those gains back, people taking that profit on that GBTC trade, now that they're able to redeem their Bitcoin now that it's in ETF form. So, we've seen Bitcoin had a tremendous rally at the beginning of this year, and we're starting to see it just kind of fade a little bit. So now Ethereum is, still taking precedent over the past week, and that's something to take note of. Now, also what we can do is let's take a look at things like on a monthly scale. Now, here's where you start to see a common theme of coins that on even a monthly and a quarterly scale seem to be just a step ahead of Ethereum and Bitcoin. And so some of these coins are large market cap coins. For example, Bitcoin over the last month, pretty sideways. So compared to today, last month, it's only up 2%. Ethereum, had a nice move, up 16%. But Solana has been kind of keeping this theme of still receiving liquidity. Like when there's liquidity to be had in Bitcoin and Ethereum, Solana is just kind of eating off it. And Solana is going to be a beneficiary of that as well. So up 32% over the last week. Outside of that, we also see things like Injective, Celestia, coins that seem to be, really running in their first real cycle. Optimism, even in its first real cycle. These are the coins that are, really outperforming. So up 65% compared to Ethereum only being up, 16% over the last month. So these are things to pay attention to, and we're going to continue to track and pay attention. But as you can see, the big winner here, this is EHEX, by the way. So EHEX up 117% over this month. So that looks pretty good. If you are a holder, because that's what it's all about, getting the stuff at a reasonable value, holding on to it for deal life until you get the profits that you're looking for. And so, that's the whole gist of why we take so much time to look at these things individually and just, try to know some trend. For example, Arbitrum. So what am I noticing about Arbitrum and Ethereum? Or I'm sorry, Arbitrum and Optimism. They're both connected to Ethereum. So that seems to be somewhat of a theme that, that we can see here. And we've got Metis. So for example, I've been talking about Metis for seems like a year and some change now, but really seeing Metis bubble up over this past month, up 385%. Come on now. So, there's money to be made within crypto, but the question is, do you know how to position yourself to receive the benefits? And that's what we're here to do and talk about. So things are looking pretty good overall for the day. Now, outside of that, something that we can look into is, okay, now what has performed well over, let's say, the last, year. So 365 days. And same type of thing. You got Bitcoin up 100% over the last year, Solana outpacing significantly. And let's see if we see some names that seem to continue to pop up here in green. So Celestia up more than Bitcoin over the past year. We also have Injective up 23x over the past year. Come on now, like this is only in crypto. Can you get this? And there's other stuff, but stuff like Osmos, for example, it was around last cycle, but came out at the top of last cycle. But it's been a flourishing, part of the Cosmos system as far as liquidity and volume being had on the DEX. So, things to pay attention to as we kind of trek what is doing good at this part of the bull, right? We're in the early stages. Well, I'm not going to say we're in the early stages. If I'm to give my best, guess, this is not a prediction or, don't, quote me for a fact. But if I'm to look at where we're at in the cycle currently, I would say, we're right about like that, getting close to that 25 to 30% range. We still got like a good 65 to 75% left to go of this whole bull run. So that's where the most gains come from. So with that being said, if we're above that or if we're below the 50% level, you're on size. The moment we get into like this time next year, best believe things are going to be ripping and running. So you don't want to wait too long to realize these gains. You've got to take action, and now honestly will be the time, whatever it is that you're going for. So we have things like Say up 315% over the past year, and this wasn't even out a year ago. So that just lets you know that it's been excessively bullish, especially since it's been out. So that's a good wholesome look at just where things are at over the past year. And if we were to look at this on a yearly basis, this year, or just like the past 365 days, has been positive for crypto. Why? Because we see a whole bunch of green and not that much red. So that's a good thing to take note of. Let's see what's going on in the chat. What say you guys? Who's here? What y'all talking about? What do you have in your mind as we kind of trek through these waters? And yeah, just kind of go into the rest of this week, man. We got what it do. We got Wade in the chat. What's good? And I can't wait because now that I'm seeing some of the guys here, we are gonna have a private stream after this. So we're not gonna go too long today, but we will go through some decent concepts as far as like, hey, how to really try to position yourself for the bull run. But in the private stream, we're gonna be doing all kind of information when it comes to like taking the details to the next level. So, hey, if you guys are not in the vaults, if you guys aren't a part of the Vaults of Crypto Telegram, really check it out here at the bottom, vaultsofcrypto.com. Super easy to sign up. And hey, hopefully look to see you guys there. Who else we got? Let's go. We got Mr. LePage. Yo, what it do? And of course, let's go. He's saying it like it ain't just me, right? He's experiencing it firsthand. So, and what y'all can do, man, always feel free to just talk about your experience. Have y'all made money or not? And I mean, that at the end of the day, that's what it's all about. So if you've made money since you joined, that means things are going pretty well. So with that being said, yeah, let's keep on rocking. So outside of that, another thing I really wanted to talk about was now as we transition from a time period where things are seeming to be a little bit more sideways. Like Bitcoin had a very nice run over the past few weeks, but now it's kind of like, oh snap, are we going to just crash down? Because I've been getting asked this question basically for the last week. Are we going to have like that COVID moment? Are we going to have that 50% retracement because we've had such a bullish, lunge to the upside? And the thing is, like, recognizing that each cycle is going to be different. Like, this cycle is going to be different than, that 2018 to 2021 cycle. It's going to be different to compared to that 2014 to 2017 cycle as well. So one thing that we're seeing is, like, yes, there's drawbacks, but those drawbacks have been fairly limited. But at the same time, if we really look at it, like, yes, we've gone up to the upside, but like compared to 2017, off the bottom, at this point in time where we are in the cycle, like, Bitcoin had already gone up like 300%. So from a percentage aspect, you got to understand that as Bitcoin gets older, as Ethereum gets older, for any asset, as it gets older, you're typically not going to see as much volatility to the upside, but then also to the downside. So us kind of just drawing back, from the top, I think we're maybe about like 18% sitting right here, just about 43K. We basically touch just like a little kiss at 49K. So that's a retracement now, even though there's a large wick to that. And so kind of what we're seeing is a little momentum is just still shuffling around. And why is that? Because outside of crypto, there's other things that are just not ripping around. The NASDAQ is not like flushing to the upside. The S&P 500 is kind of just staying sideways to the downside. So we have to understand that there's many factors outside of the hype of the ETF that was keeping us up that can say, okay, cool. When it's time to chill out, it's time to chill out. But utilize these times to not only just look at some coins that you're interested in, but also look at the information that you need, right? Because that's going to give you the confidence. I think the hardest thing, like, to be honest, like the hardest thing was when people were experiencing the whole FTX situation and people are like, oh, snap. Like, I don't even know if crypto is going to be something that is going to be here. Like, people are really thinking that. I was like, come on now. Like, can't be serious. Like, I could understand if you were saying that back in like 2014, 13, sure. But everybody was like the amount of fear, like, and I was doing, like, go check those streams when I was talking about this during that time. Everybody was so scared. And that's a time when it's like, you got to say, hey, I got to have the big cojones. I've got to be the person to say, you know what, even though I'm scared, know that you're making the right decision. Because when people are selling their bag and like you see prices just jump into the downside, like we're having like negative 20% days, you've got to understand that's the best opportunity. So here's a good barometer how you know if you're going to do well in this game called crypto. If you are like still buying and you're still kind of like, I'm not quite sure, like, yeah, like that's actually the feeling that you want. That's how you know that you're investing in the fear. But if you find yourself buying and everybody else is buying and everybody else is happy, everybody's on YouTube, x.com, just like, yeah, we're making money, and you're buying at that point, just know the risk premium is going to be higher. Simply just because that's just how it works. Like, you got to go counterintuitive to what the emotion is that you have at the moment. That's how you're going to survive in crypto. So when you start to see things get a little rocky or it gets a little boring, ideally those are the times when you want to say, okay, where's my fiat? Like, let me get out my pockets. Let me tap the bank real quick. Let me see what I got. Go work those extra hours and really start to get the ball rolling, really put that capital in, because that's just how you're going to keep a low cost basis. And that's just a good sentiment type conversation. This has nothing to do with TA. This has nothing to do with anything else outside of like managing your own emotions. So, let your emotions lead you to a certain extent, but do the exact opposite of how you feel. So that's the easiest way to explain that. Let's see what we got. So I'll be getting off work soon. What time will we have the webinar? Is recorded? Yes. So yeah, we'll be having the webinar later tonight. And yes, it will be recorded for those who might miss it. So, and I would say right about just here in an hour and some change. So today's going to be a quick stream. Like I said, I do want to talk about how we may want to facilitate a thought process of DCAing as prices go up, but then have retracements and some useful tools to be able to do that. But yeah, so let's see. I'm in Aussie crypto chats, and about 25% of them think crypto will be gone in a few years. And that's how you know you're still ahead of majority of society, because people still think that like either they don't know what it is or they think it's going to be gone, like as if it's like 2013. So that just lets you know on the long-term time scale, you're going in the right direction. And the thing is, as things continue to get harder out there in the workforce, people are not going to get paid as much. Living expenses are going to keep going up. Like, it seems like everything, like bills are going to keep going up, utilities. Inflation is like on a cumulative basis, it's not going anywhere. And the reason why that is because, you know, the continuation of the devaluation of the currency. So we're not talking about inflation year over year like the CPI print. We're just talking about, hey, the simple matter, and I say it every single stream, the more money that they make, the more economic units that you have to fight and sweat for and get less value for because they're doing this. And so just like how we played that video about like the taxation or like these tax companies making things more difficult than it has to be, simply understand that you're in a system that is trying to be built to, you know, get you to fail. And then so you have to counteract that by being savvy. You have to have the information. You need to, you know, take the action incrementally and try to stack year after year after year, not only on your finance, but just how you're attacking this changing environment. And so at the end of the day, that is what's most important to anybody that wants a fighting chance over this next 10 years. And so, you know, that's why I do this channel every single time I stream. I have this on the precipice of my mind. It's like, how do I get people to realize that like the way to break the mold, the way to get out of this rat race is to simply say, you know what? I got to do something different. I can't just go to work and ask my boss for a raise and hope that everything works out. Like, that's not a good plan. I can't just try to invest in a 401k. Like, they're going to charge your 401k, 1.5%, like GBTC. Like, they're going to put you in stuff that give you minimal returns that's not even keeping up with inflation. So with that being said, understand that you got to get outside the system, first of all, with your thinking, but then with your action. And that is how it's going to be done in this, modern age. We're not in the industrial age no more. Like, we're in the technology age. And so information is king. If you have information, you give yourself a chance. And I feel sorry for those that are not trying to gain information when it comes to understanding how this game works. So, it is what it is. But hey, I digress. So and let me get off the soapbox real quick. Let's jump in. I do want to take a look at a concept of DCAing. So as we move forward, what does it look like to DCA in a thriving market? Like, yeah, we've had, back in 2023, a little bit more of a sideways and, some of the upwards gain we got, but we really had an influx of capital towards the end of 2023. And I'm talking about specifically altcoins. So October 16th and 17th, that's when the derivative space really started to kick up, and more so on the option side. And same thing, we're going to be talking about that tonight in the private webinar of how that really matters and how to play that moving forward. But not only that, we're seeing these mainstream things come along, but like, it's different landscape trying to invest when prices are lower. Like, when you have weeks, like for example, like we had Bitcoin jump from like 43K to 49K, and people just don't know how to act, right? You see people just literally buying that top, and I'm just like, yo, what are y'all doing? Y'all realize, hey, you realize you're not going to help your cost basis. But just in general, like I said, it's very important to get your feelings out the way, but you have to have some rules. You have to have some, I guess you can say, some type of measurement stick that you use to help your decision making when things seem to just be going up majority of the time. And so that's kind of what we're going to talk about today. So let's get it. All right. So the next thing I want to kind of go into the concept of is just looking at, DCA. First of all, what is it for those that may not know, and how effective can it be, right? So DCA, the term DCA means dollar cost average. This is saying, hey, I'm going to invest periodically, which is something that can be as little as once a month or more frequently, saying, hey, I'm going to invest once a week, depending on what you think is going to work best for you. And there's going to be some stats that I'm going to give you guys that may lean you towards one versus the other. But in general, you're going to invest in the same thing or the same group of coins, for example, for a long period of time, not just like, hey, I feel like this is the pinpoint bottom, or hey, this seems to be like a pinpoint like value proposition. I'm just going to throw all my money in at once, but saying, hey, I'm going to take the more methodical approach. I'm going to take the approach that is going to be just, hey, let me just take my time with this, And so one thing that we can definitely see is, and I'll say this really quickly, when you DCA through time, what you find out is you severely limit your downside. I'm going to give a couple examples of, like, for example, let's say you're investing all the way at the top, November of 2021 in Ethereum or whatever. But you just kept investing through that downtrend, which is horrible. You got Luna, you got Three Oaks Capital explosion, you got FTX fraud, all this stuff, all these things happening in the bear market. But let's say you just continue to invest monthly, through all that stuff, and even all the way up until today, you still find yourself at a positive. Like, so you're not at a net loss, first of all, versus the people that only wanted to invest at the top. Let's say you might have bought Ethereum at 4,000. Guess what? You'd still be at a loss because Ethereum ain't touched 4,000 yet. So dollar cost averaging is one of the best ways to hedge downside risk. I repeat, I will say that one more time. Dollar cost averaging is one of the best ways to reduce downside risk. And now there's a thing called dynamic DCA when, hey, you see certain dips under certain levels. Like maybe if we find something that gets below its 100-day moving average, okay, now maybe you're willing to invest just a little bit more versus just a regular drawdown. So there's different criteria that you can use, but the whole point is to be an investor, stay an investor, and stick with it through time, and you're going to give yourself a really good chance to make it through on the positive side. Now, one thing I will say, if you DCA as prices go higher, yeah, you're going to raise your cost basis, but it just depends on where you're at in your journey. If you're somebody that's been investing consistently for the last year and a half or whatever the case is through the bear market, like kudos to you. But if you're somebody that's just now starting, okay, cool. Like we're just in the environment where we're going to go more up than down, most likely through, this next year, year and a half. But at the end of the day, you still want to try to accumulate it back. And so, it would be crazy to say, hey, let me just, it's low right now. Let me just put it all in right now. Just do a lump sum and, not invest anything else for like the next, 3 to 4 months. Like, we still have a little bit of time for that hockey stick. And the whole point is you just don't want to say, hey, I want to just touch it just a little bit. You want to get used to seeing what this stuff looks like, because DCAing also keeps you more, I would say it keeps you more in tune with what's going on in the market as well. So mic check, mic check. I think we're back. Yeah. I think we had some technical difficulties. Like I'm saying, like, because I'm in an area where the weather is crazy this time of the year. But appreciate y'all that are still here. Let's see. Can y'all hear me? Mic check 1, 2. Let me double check on my end. Let's see what we got. And we're back. Cool. Perfect. Cool. All right. So if y'all missed what I was talking about, the concept of saying, hey, DCAing depending on where you're at in your journey, but let's say you're a person that's DCAing for years at a time, what does that actually look like? Like, if you're someone that's just trying to be a tourist, okay, cool, DCA for like a month or two and see what happens. But why leave things to kind of like a dart throw at the wall? Like, you really want to say, okay, let me try to craft a strategy, because DCAing is, one, is habitual. Like I said, it gives you an opportunity to stay congruent with your knowledge, because you're going to be looking at the market more often if you're DCAing, right? And just outside of that, those two aspects are enough to say, hey, it's worth it. But not only that, like I said, it's going to limit your downside risk. So as we talk about the concept, and I got it here. Let's say you're a person that's investing in Ethereum over a long-term time scale. So we're talking 5-6 years. What does that look like? And let's say you're just somebody that's just got a regular job. Let's say you're doing $100 a month. I think for the average person that is working, that is very doable. But, time, like I mentioned on streams past, is probably going to be one of the biggest factors on the type of gains that you can get. So let me see if I can pull that up one more time. Sorry for the inconvenience with the internet. So yeah, we're good. And let's talk about this aspect of DCAing in an environment while things seem to just be going up more than they're going down. So here we have cryptodca.io. And this is a beautiful example of, because it's going to give us our overall portfolio value in orange. It's going to give us, just the amount that we've saved. And then if we want to take a look, compare it to lump sum investing, how does that fare? And so, and we want to look at Ethereum in this case in point. So Ethereum, someone that's investing $100 a month. So we got that. We can even look at bi-weekly and weekly and see if that makes any difference. But let's say, I'm someone that am investing for quite some time. So I'm just going to use like a general example, like the first time that I invested in Ethereum, which was, we're talking spring of 2019, and we'll just use a random date. And then, so what does that look like as of right now? So this looks pretty good. And what we've seen is there's time periods where the portfolio has touched $42,000. But at that time, if you can see it, we've only invested $3,200. That's pretty good. And then so that would yield just about a 12x on our capital. But then, we have bear markets, And so the thing is, what happens to a lot of people where they're willing to invest in Ethereum while things are ripping and running, and then they experience this bear market and they're at a net loss. The best part about this strategy is you see how we are above this dotted line, meaning that, hey, just because we have the frequency, no matter where price was, every single month we're making that $100 investment, we find ourselves just staying net positive. And at the end of the day, that's probably one of the best feelings when it comes to investing, is being net positive, not just for like a little bit, but the majority time of your investment. So that's pretty good. And that's investing at a relatively like fair value cost from the beginning, right? Because at the time, Ethereum was only just a few $100. And so so that's the best part about also getting in early in a cycle, because even though Ethereum, at this time faced like a huge like 80% correction, I think it's like 85%, you're still net positive at that moment, 162%. And so you would have in your portfolio just about $10,000, but you've only put $4,000. So you're still feeling pretty good. And so the power of DCAing is that important. Let's look at the aspect of what happens if you buy a top, because that's what happens. People buy a top and then they get wrecked 85% and then they sell. But what happens if you just keep buying from that top? So let's actually go to the top. Let me see, or let's actually get it to the day. That way we can be pretty precise. So let's look at these charts here. Let's roll over to Ethereum really quick. So let's pull up ETH and say, what happens if I bought the top? Ooh, that hurts. So we're going to find the exact top. And yeah, we're going to keep this on the daily chart so we can get all that price data in there. So we're going to go to the exact tizzy top, which the exact top was this day here, November 10th, 2021. And we had a price of, man, like it was really rocking and rolling. We had a price, and this is, based upon, I want to say Bitstamp, just about like $4,800. So that's a pretty nice price back then. And we're trending in that direction in this bull. So let's grab November 10th of 2021, and we're going to estimate what does it look like if I just keep DCAing. So we're going to go 2021. We'll go to November and we'll choose the 10th. Boom. And this is the beautiful thing. Like, and this is as of today's date. If you just would have kept investing, guess what? You would still be net positive 17% today. And that's you buying the top. So now that you guys understand that it limits downside risk, because we're talking about from the top of 2021 till today, even in that time duration, it's going to help you out. But then what you could also do is now talk about doing the dynamic DCA. So once you see something like, so for example, how do you think about doing more of a dynamic DCA? So if we put this like on the weekly chart, and there's things that we talked about for a very long time, as far as like how to know when thing is at something is at like a really, really good discount. One of the most simple indicators, it's free. I've got some things that can help enhance, what TradingView has, but you can just simply use the RSI, and you can let that be your barometer. Use the RSI on the weekly chart. And we'll take off some of these extras for now. And the gist is, if you ever see an asset on the weekly chart hit the bottom portion of the RSI, that's when okay, cool, let me start this dynamic DCA. Meaning, hey, the prerequisite that I set, and yours can be whatever. I'm talking about, mine here, which is the RSI touching, 30 on the weekly, RSI here on Ethereum. That lets you know, okay, instead of doing $100, all right, cool, we're still relatively low on the RSI. Let me do $300. Let me triple it up and do that for like the next, maybe 6 months or whatever the case is. And we'll just see how this is. And so that's how you kind of choose your barometer, choose your scale of, hey, I'm going to change my strategy up with these prerequisites. And that's always going to give you a systematic way to achieve success, because, if we would increase that DCA, then this person would be in a little bit more profit than just 17%. And that's the key, is really taking compared to these, like, when we have these low bottom basins that we've talked about for, I don't know how long. Like, this was that bottom basin that, potentially may never get touched again. So if you were an investor in Ethereum from June 2022 to just about October of 2023, you've literally cemented yourself. And it depends on how much you got in your bag during that time. And there's still some room for growth because we're not that much out of it. But, you guys are positioned for a really nice ride coming along. But nonetheless, like I'm saying, even if you find yourself buying at these tops, the redemption period is also investing in the bear. And so DCA, like, even if you DCA the bear, the bull, all that, being net positive as of today is still probably going to be the situation. So let's take a look. So let's track back even further for Ethereum. So let's say that I'm a person that I knew about Ethereum a long time ago. So let's go back to like 2016. And let's say like towards the end of 2016, right? So December. Let's go December 14th. What does this look like for me? And that's why time is so important, because yes, that is quite some time. We're looking at just about 7 years of investing. But do you see what's going on here? Just $100 a month, $100 a month, and do it for some years. And this is including tops and all. So maybe you're a person that's like, hey, you know what? I'm a multi-cycle type investor. You would have invested $8,600 over a span of 7 years. I would venture to say that most people over a span of 7 years can have dispensable capital to put $8,000 into anything. So imagine this being post-chain, $100 a month. We're like, because that's what everybody's about right now. Post-chain is pumping. It's like, oh man, how did I catch this perfect dip? But just see yourself doing something for a duration. $100 every single month. $8,600 is not that much over 7 years. Your portfolio is going to be a nice lump sum. That's $123K. And that's giving you a nice 13x on your capital. So it's not the most, like, it's not being super pinpoint, like getting the exact low and then selling at the exact top. But if you want to talk about, what things would have looked like for you at the top, you would have put $6,000 in during that time. And this is somebody that's doing something very modestly, $100. They're not doing $500 clips or $1,000 clips or $10,000 clips, $100. In 2021, they could have, basically come up on close to $250,000 off of $6,000. So time is very key with DCAing, but frequency is also key. What does this look like if we double this up? So we do bi-weekly. So instead of a 13x, what does that look like? And now the key is When you do bi-weekly, and what I'm going to talk to you guys, here's my ethos, my thesis, and just, the percentages are going to show you guys. When you go with a bi-weekly approach, it typically is going to yield you a little bit higher percentage over the duration of times, especially once you get to like 2 years and above. And so, because what do we find? We find ourselves going to, have an experience of like 13x, which is, pretty good, to being able to lock in 117x. Yes, you're investing more money. So you're investing 18K, but on that money, because you're bi-weekly, you get a higher return. And now you have a portfolio that sits today at almost $250,000. And so, at the top, we're talking about close to $500,000, and you've only put in 12K. That sounds pretty nice. And so crypto is, like I said, if you're trying to break the mold, you really just got to try to develop a plan, try to get something that's going to be here for some time and make it through the cycles. So being able to identify that, but understand even the average Joe, somebody that's like, man, I hate my job. If you give yourself 6-7 years, you could have a nice portfolio like this, and there's a lot of things that you can do with 200 grand. Like, for a lot of people, that is life changing. And so, and if you're like, man, Swerve, 200K ain't enough after 7 years, I need more. Okay, well, guess what? Instead of investing just $100 a year, what does investing, let's call it, or let me see, $100 bi-weekly, let's triple it up, 300. I think that's relatively decent. Let's say, you're working pretty good. You can save $300 every 2 weeks if you're working hard. And the key is try to keep your expenses down while you're in this growth phase. I know a lot of time we want to go do X, Y, and Z, but think about the opportunity cost. And so these numbers are proof that if you just stick to what you got to do, say, hey, I'm going to commit, a nice bit of time, because there's a lot of people that probably had an extra $300 that they could spend every couple of weeks, but it ends up going to other stuff that doesn't net them anything positive, for one, and probably made their life even more complex or complicated, So with that being said, you can see, even at today's valuation, you'd still have 700K, but at the cusp of things looking really, really good, you're talking about 1.5 million bucks. And anything up here, right? Let's say you didn't get it perfect. Let's say, anything up here, you're talking about anything between $1 million and 1.5 off of you investing 55K. And remind you, like, because you're just like, man, investing 55K, that sounds hard. Remind yourself, this is through time. This is through, 6-7 years. And so, like I said, if you're serious about what you got to do, this is achievable. So that's just the example. So now let's take some questions, but then we'll kind of get into a couple charts and talk about now how to execute. Like, what is the concept of executing? Because during these weeks and stuff like that, when should I maybe dynamic DCA versus just say, hey, just let it fly, just wherever the price is, let me just buy it. So let's see what y'all got to say. All right. Cool. Yeah. So you bought that the Ethereum top 2022, man. And and it wasn't that, I mean, once we hit 2022, we kind of trekked down to like, I want to say like 4,000 flat potentially, or 3,500. So it's not too far away. So same thing, if we're talking about the concept of you DCAing through time, you still should be net positive, because you've been able to buy that $850 Ethereum. You've been able to buy that, $1,000, that $1,200, that $1,500, that $2,000, that's, $2,500 Ethereum, where we're at, to get your cost basis down. So people got to understand, this is a game of cost basis. Like, let me repeat, and I'm going to look directly into the camera. Crypto, especially since it's like such a volatile asset, it is a game of cost basis. The people that get their cost basis the lowest and hold the longest win. It's really that simple. So if you feel like you're not going at a good clip when it comes to this whole crypto aspect, these concepts are so pivotal to understand, and that's why I really like to spend time talking about them. So yeah. Let's see here. So with so many opportunities, it's hard to decide a DCA strategy. Build larger positions on a few coins, or spread out into coins that are on good dips. And I'm kind of somewhere in the middle. Like, I think not just having like one or two coins and then trying to put all your capital into them, because crypto is so diverse and there's different things that pop up in crypto during, the different time periods. So I think having an allocation within GameFi, having, coins that are, specifically in like the top 20, for example. So maybe getting a position in Solana and Ethereum, whatever the case is, like a good mix is always going to be a good idea. because we don't know how. We know that liquidity is going to come to the market in general, but we don't know the ones that are just going to seriously outperform everything else. So you do want to do your research through time. But I would say like a nice, just like this is your first cycle, just say, hey, I'm going to try to not spread myself too thin, but I want like a nice like amount of positions that are like my core portfolio. So anything between like 5 and 7 coins, I think is a really good diversified portfolio just within crypto. And that's going to give you a chance to get a taste of everything. Like you might have a little IMX, or you might have, some Illuvium or Celestia, or, Hex and Postchain, or Ethereum, Solana. Like these are just some examples. But, you don't want to just say, all right, cool, I have some Ethereum, so let me just get everything attached to Ethereum only. So unless you want to be a maxi, like, hey, like if you've done the research and that's where your comfort level is, okay, cool. But you'll be surprised that the more that you look into this stuff, there's a lot of good stuff outside of just things that have been out for a long time. So, and that's the beautiful part, just about being able to look at yourself and say, hey, if I'm long term, I'm trying to find the things that are going to be here for not this cycle, but what are things that are starting to prove themselves to be big players in the game, which Solana is doing a big job of just like kind of just shoveling that snow throughout the beginning of this year. But then especially, as things kind of got going in the late part of last year, Solana's been doing this thing, amongst some other coins as well. So keep that in mind. Let's see. So the idea is to DCA consistently and keep dry powder on the sides for dynamic DCAing. Now we're talking, right? So because you might have like a modest DCA. So your modest DCA might be $100, but you may make more than that. Like you may, have an extra $1,000 every month to invest. So yeah, do your $100. Just hey, and choose a coin, for example. Like let's say you're choosing 2 or 3 coins every single month. You're going to do $100 in each, and kind of rotate that throughout the months. But then it might be a scenario where it's just like, oh snap, I see this coin in particular that, I want to go ahead and increase that bag because I see there's a nice dip on this coin. Okay, cool. Now some of this dry fiat that I got, let me throw it at that. And so do that dynamic DCA. But typically things are going to trend together for the most part. And so, especially in this part of the cycle. So, it's really about just being to identify the coins that you value deeply and just kind of seeing, okay, where do I need to be at a nice risk adjusted level with my cost basis, and just plug away. And like I said, it's not about getting this thing perfect, but it's about just taking action. If you're doing that, you're gonna get gains in several different coins, and you're gonna like I'm gonna tell you this now. Like if you have a portfolio of 5 to 7 coins, there's going to be one of those coins that's going to outperform your expectation. You're gonna be like, man, I had no clue this coin was gonna do this, but I'm glad that I got some while things were, kind of formulating as we go up in the bull market. So just kind of keep that in mind, And I think the post-chain ecosystem, now people are starting to realize like, oh snap, I really should have been, doing a little bit of that buying in, September and October and August of last year, because, now people are really starting to see the viability of, hey, like when liquidity comes back, it's really on and popping. And we're just getting started. So down 90% on my EHEX, bought the top, managed to DCA to 12 cents, but I got PX copies, And then so since you got the copy, you got a double on all of your stuff in your wallet from Ethereum. And so the key is like yeah, regardless of where you started, I just gave the examples of it's really about where you finish. And then so just keep plugging away. If you feel strongly enough to continue to hold whatever, so Hex in this example, then cool. Yeah, just keep DCAing no matter where the price is, and that's the key. Like I said at the beginning of the stream, no matter what people are saying on Twitter, like or whatever, or how much fear that you have personally, if you just stick to the schedule, like because Hex, especially EHEX, it got to like what 2 zeros and a 5, 2 zeros and a 7. How many Hex can you get if you're like, hey, let me just save up and spend $1,000 during this time? That really nice dynamic DCA. You probably could have got, for that $1,000, you probably could have got the same amount of coins as if you would have spent like $20,000 at the top. So like it's really important, y'all, to like keep paying attention. But when you see things really starting to look crazy and people are not looking like they want to go into an asset, you got to put the helmet on and you got to go. And you're gonna find out later on that is how this works. So yeah, good for you just to stay active and keeping that DCA for sure. So so DCAs, man, like it brings a sober mindset to your process moving forward. So I got a question. And this one's actually pretty interesting because I want to take a look at a website, especially as we kind of end this stream. And it's going to revolve around just looking at things from a large view and then also looking at some things in particular. But Michael Saylor is a guy that we all know. And he bought a lot of Bitcoin. And he's probably up on his Bitcoin position. So feeling pretty happy. Do you guys know potentially, would he be up more if he would have did that same thing with Ethereum? Or would he still be down? Or would he be somewhere in the middle? Put in the comments what you guys think. If he would have accumulated Ethereum, so the same exact days, the same exact dollar amounts, like where would he be versus where he's at now? Would he be off better or worse? So that's an incredible question because I don't even know if people have even realized that, but it's just like I said, keep thinking about how things mature through time and understand that, as things go through different cycles, the different opportunities will show us themselves through the years. And so let me scurry over there real quick. And so, if y'all have an idea, just put BTC or ETH and we'll look at it here in a bit. But before we do that, let's jump over to blockchain data center. So this is blockchaincenter.net. And this is where you can go and check whether it's an alt season or a Bitcoin season. But at the same time, you can also look and get a lot of other tools here. So one thing that I want to do is kind of check what are some of the daily trending coins. And trust me, I'm not advocating, hey, go buy this coin because it's at the top. But you want to see, hey, what's at the forefront of people's minds constantly. So, say, and this is something that we talked about for quite some time. But yeah, let's just kind of continue to trek on through what else they got. And just really, really, starting to get used to seeing certain names pop up. We see the top trending coins on CoinGecko. And this is kind of just, going through like my habitual habits of when I do research. I'm looking for commonalities through time. So same thing here, kind of seeing Celestia again as well. And looking at where are the market caps. Like, I like when I see coins that are in the top 100, for example, that keep popping across people's feeds or keeps popping up across, something on the news or whatever, right? Because what have they done? They've already gained enough market share to, get some momentum. They're not some coin that's just popping up yesterday and has a market cap of like 5,000. But at the same time, if it's in the top 100, it has room for growth with like a little bit better risk profile because it's not, extremely, volatile compared to something that has low liquidity that just came out, a couple weeks ago. So, we're not just trying to catch a hype. We're looking for real viable things for the long term. And then so kind of just going through some of this information. But outside of that, this site is good for other things. So looking at the tools and the charts and what can we look at? So we can look at, comparison, sentiment, ROI comparison, all that good stuff, top 10 Hall of Fame, dominance chart. And so dollar cost averaging, like the same concept that we were talking. Let's go ahead and see what does this look like when we look at the top 10 Hall of Fame. So let's do that if we can. Is it gonna let us do it? Let's try that. All right. So top 10 Hall of Fame. So what this is doing, since 2017, there were 48 different cryptocurrencies on top 10. This is a list of them and the period of time they were in the top 10. So one thing that you'll see is since 2017, it's been the Bitcoin and Ethereum show the whole time. XRP has been around for a long time, but we can look at the data that XRP is just not going to yield the return that Ethereum is getting, simply just because of the use case. Ethereum has smart contracts that you can literally, get access to all different type of DEXs and dApps that has a lot of economic energy behind it, a lot of volume simply because of the technology. So this is better technology than this, plain and simple. Now we've had, so let's try to exclude the stable. So, we'll forget about USDC and USDT. But things that have been around for a long time that stay in the top 10. It's just a matter of fact. BNB. Now CZ, being a person that, is, pretty much, on trial, basically. We're going to find out what's going to happen with him next month. But, we have things like ADA that have stuck around off and on since 2018, but especially since 2021, the beginning of 2021, it stayed in the top 10. So that just lets you know that there's bags there. And all I'm talking about is like, hey, what has a chance to make it through several cycles? It may not give you the best yield, right? It may not give you the best return for this cycle. But what I will say is when things are sticking around for not just one cycle, but having relevance for cycle upon cycle, this is something to realize. But as we kind of trek through, what is more recent? So EOS, not even a factor. Doge, even though Doge is a meme coin, it stuck around for a good amount of time during the bear. And then the other, I think is the riding knight that's really taking a lot of precedence as being that coin that is making a name for itself as a household name, Solana, simply because of what they're doing. And so Solana has really been a part of this race here, especially within the last year. And so top 10. And as you can see, all of these other ones currently are not in the top 10. So that has you should have an understanding that, hey, whatever has like the longest trail, basically, that's going to give you a hint of saying, hey, this may stick around for a good amount of time. So DOT has a decently long trail, but it hasn't really been in the top 10 for the past, 6 months, especially. And you have all of these ICO type cycle. This is 2017, 2018 cycle type coins with XMR, so Monero, you got Dash, IOTA. But as you can see, the trail's not that long and they weren't continuous through time. Dash had a little time, but XEM, like all this stuff was like fly by night because you see how small these spaces are, whatever you're looking at. Luna, for example, that was a crap hole. Like that was a whole situation. You're like, dang it, why did I even get sucked in that? But that was only a small duration of time. So, this is just like I said, a good wholesome look at like these are 48 coins that have spent time in the top 10 before, and you're gonna start to find clear winners, And this is with the understanding of saying, hey, if I do want to just choose this strategy of saying just $100 into something super simple over a span of 6-7 years, you give yourself an opportunity of coins that have shown to be here for some time. And so, Solana, I mean, I'm gonna keep saying it. We might have this conversation in 3 or 4 or 5 years, but Solana at $100, hey, this may be a situation where you're happy that you put your little $100 in, or your $50, whatever, your $20 every single month for 5 years, because now all of a sudden now you can go buy a house, or go buy your dream car, or whatever, So the power of DCAing is more important than what people give it credit for. So a lot of good information on this site. What else we got? Let's see. There is no second best. So let's talk about the question. But before we do that, we got to watch the video. Let's pull it up.
Which one's the best crypto asset? Well, Bitcoin's the best crypto asset. Okay. What's the second best? There is no second best. There's no second best crypto asset. There's a crypto asset. It's called Bitcoin, right? Right? There's no second best, okay? But take all your money, buy Bitcoin. Then take all your time, figure out how to borrow more money to buy more Bitcoin. Then take all your time and figure out what you can sell to buy Bitcoin. And if you absolutely love the thing that you don't want to sell it, go mortgage your house and buy Bitcoin with it. And if you've got a business that you love because your family works for the business, it's in your family for 37 years, and you can't bear to sell it, mortgage it, finance it, and convert the proceeds into the hardest money on earth, which is Bitcoin.
All right, so that's Michael Saylor. He is the CEO of MicroStrategy. So everything that he's saying over a long duration of time, so we're talking 5 years plus, is correct. Like holding Bitcoin versus a house or whatever, car, anything else, NASDAQ stock, Tesla, yeah, it's gonna fare better over that duration. So he came on the scene last cycle, but here's the thing: he took advantage of DCAing through time. So as of right now, MicroStrategy has invested of their actual dollars just under $6 billion. And so investing through Bitcoin through the duration, that's getting, part of, some of that last cycle, but definitely taking advantage in the bear market. He's up 37%. So instead of having $6 billion bucks, he's got 8 billion. That's pretty good. But the right answer to the question is, man, if he would have did the same thing with Ethereum, he would not only have 8 billion bucks, he would have $11.6 billion. So yes, I understand how he feels about Bitcoin, but with the same exact DCA strategy with, billions of dollars, it seems like at a time, he would be doing 2 times better with Ethereum. Almost. So that's something to think about. And so the chart proves it, the data proves it. But even if he would have staked his Ethereum through that time, like he'd be off even better. He'd be at like just under 13 billion bucks. So, Mr. Saylor, I feel what you're saying, but numbers don't lie, brother. They don't lie. So I thought that was just pretty funny because a lot of people, I don't think they know that there. So yeah, it's been a good sober stream. Nothing too complex today. Just kind of getting a little bit of forethought on strategy and a little bit of understanding on just, hey, how can I move forward in the process of a moving bull market, essentially. So, and I think what I'll do one more gem. So let's talk about TA briefly and how potentially you can not only use RSI, but other things in your TA to help you get the bottom basin after prices have retraced down for a little bit. So I briefly mentioned this a little bit ago. So let me see if I can pull this up. All right, so let's pull this up. So here we got the pulse chart. And one thing that I was talking about is being able to use the moving average envelope. And the moving average envelope, it puts 2 moving averages together and it gives you the upper moving average, the bottom moving average. And it helps you get an idea of overvaluation and undervaluation. So it's pretty simple. So a couple things, know when you're in bull mode, know when you're in accumulation mode, and know when you're in bear mode. So for example, once you see something like this, it's clear to see that you're in bear mode. So let's just make this make sense. So this is clearly bear mode, right? So let's make it make sense. That's clearly bear mode. And how you can tell is, especially putting it on the Heikin-Ashi candles. And so, boom. And we see several, let's see if we got it. So we see nothing but a whole bunch more red than green. So this is easy, like after like this first dip and just these 2 candles up, like you should fully know like right here, like, oh yeah, this is bear market mode. And yeah, you got, things are going to flush. And this is on a daily chart. It's easier to see when you look at a weekly. So that's clear that you got nothing but red candles for quite a long time. So there's that delineation there. So bear market. Let's go back to the daily. Now we see a mismatch of, green and red, especially up in here. A little bit of green here, some red, but we're above the moving average envelope. And then so this is a lot different than the bear market. This is pretty clear. And if you're looking at things in this way, you'll be able to see this is for sure an accumulation phase, right? This is all accumulation. So for Pulse Chain from September to just about January was all accumulation. So we're talking 4 months? It's quite a long time. And that clearly looks different than what we are experiencing now. And in this move right here, why is this move different than this move? Simply because of volume. The amount of people that are participating has a lot to do with it. And so let's, keep on writing. So we have accumulation phase. And I've done streams on all this stuff. Like, hey, how to identify accumulation phase. Accumulation. Oops. So accumulation. And this is, very bullish so far. So bull. So first of all, identifying the type of market you're in. Okay. And it's easy that we can see that we're very much expanded past, this moving average envelope. So we can see the basics. We see that volume is here. So how do you invest into something like this? Like it's been going up for like the past week and a half. Like how do you get a good entry point? So what you are going to have to do is you're going to have to look at a smaller time scale. Now, you don't want your big macro thesis to be based on 4-hour or 8-hour charts, but to maybe get your first good DCA into something that's moving rapidly, you're going to have to look at maybe 8-hour or 4-hour. So, for example, let's look at a 4-hour. And so one thing that we can see with the 4-hour, it gives us a little bit more price data, and we can really see these candles. And so let's make it a little bit bigger so we can really see. And I have it on Heikinashi's for a reason. Like I made a whole indicator based upon this methodology. But you can really see, like, through even the accumulation phase, we have a lot of seesaw. But what are the better time periods to be trying to be active in your entry point? Or, let's say you're trying to catch something that is going up and you just want to just get your base allocation and you got more dry fiat for, like those bigger dips, but you need to participate because, like I said before, sometimes time is more expensive than getting in at a certain price. Like you want to get capital in before a certain time period hits. And so, here you can see how we have several Heikin-Ashi candles to the downside in red. And then we start to receive some green Heikin-Ashi candles. So let me make this make sense. One pretty solid strategy. It's not perfect for getting the exact low within a relative local time period. But one way that you can know that you're entering into a buy or, for example, a trade at a more opportune time is after you've seen a flush, so consecutive red candles. And then when you see this, not just touch the orange moving average at the bottom, but actually have one candle above. So, what does that look like? So if we're using that methodology and we're below the moving average envelope, that's the key. So that gets you a nice entry point. Here, for example, it gives you a nice entry point here. And then, yes, was that the lowest price you could have got? No, but for a DCA that you're doing throughout the weeks, that's better than buying a top, because I guarantee you everybody wants to try to buy these tops. And that's what all these wicks are. People buying and people selling into the top. So you need buyers to bring liquidity in order for that to even happen. And then so as people sell their coins up top, look at the distribution that we see. So yeah, being able to DCA at the lower portions of the moving average envelope is pretty good. Same thing, like, for example, here, you have an example here, just coming in, touching that orange one, going back to the upside. Here, there's an example here. And then, you had this flush down, and then same thing. You didn't get this exact bottom unless you're like in the Vaults of Crypto chat, because literally on this day, we had a long discussion. And, I put out a couple audio messages, especially like in this time of like, hey, y'all, like look, if y'all ain't been doing what you need to do, really use this next week to get your DCAs in. But yeah, so there's plenty of opportunities using this basic methodology to be able to get good DCAs in throughout time. And then so as we are moving forward on this 4-hour chart, this thing is moving. Like this is post-chain and it's gone up over the span of the last, we're talking a week and a half, almost 2 weeks. Post-chain has gone up just about 172% at its best, but currently at about 146%. So that's pretty impressive. But how do you invest into something that has a bullish move? Because this is just the beginning. This is a cycle one coin. And so, yeah, look at the time periods where you find yourself at least getting back into the moving average envelope. So as of where we are currently, we're not there yet. But as the days go on, as things, they may simmer down or they may keep going. But your better price entries are always going to be when you're at least touching the bottom of the moving average envelope, especially on this 4-hour, maybe looking at an 8-hour or below it, So that's like this whole concept of being on sides or off sides. So as of right now, if you've been buying, anything within post chain from the 14th up until today, so the past couple of days, you're probably going to be off sides from the local period. I'm not talking about the long-term time scale. I'm just talking about the local period within like this next week or so, just depending on where price goes. So that's just a simple way to DCA. Pulse is moving, looking pretty good. Pulse X is looking pretty good as well. And so, also later tonight, as we continue to talk about some things, we're going to be doing a deep dive into the Pulse ecosystem. There's other things that, are, they may be worth taking a really good look at, but legitimate projects. And then so I'll be explaining how they work. all that good stuff, how to maybe position yourself as you move forward before the halving and all that good stuff. So yeah. Appreciate you guys. Excuse me. Let me get a little bit of sip of the Coke. So yeah, appreciate you guys for coming through. And yeah, if you feel like this is good, but you want more information, really encourage you guys, come over to the site, join the vote, right? Voteofcrypto.com. Let me go ahead and see if I can put that link. Easy sign up. And yeah, it's one of those things is when you decide to make that move, when you decide to say, hey, look, I'm serious about this, I'm going to go be diligent about the information and get some more information that's just not out and about, like really some well thought and well put together conversation within a group, you're going to find yourself feeling pretty good, So I'm going to put the link in the chat a few times, but at the same time, you can always go to the website and check it out. So I appreciate y'all. It's been a good stream. I got to hop off. We got some things to chat about on the private stream here in a bit. But yeah, stay vigilant. Don't let the IRS get you on your taxes. So, try to, make sure you're taking those deductions, especially if you own a business or whatever the case may be. But, really see if you can try to break this mold. And we have crypto here to give us that opportunity. And time is fleeting. So you've got time, but you ain't got no time to waste. I remember I had a coach tell me that a long time ago, and I remembered that. And ever since then, I try to extract the most that I can out of every single day to have good progress moving forward, not just within crypto and investing, but just in life. So get on a good schedule, get on a good routine, try to stick to it, be around good people, have good conversation, enjoy each day, and just keep trying. Because the moment that you stop trying, that's when you actually fail. But success is simply nothing but you continuing to work hard at whatever goal that you have. You're going to have some moments where it's like, dang, it's not going perfect. But as long as you've got a noteworthy venture that you're going for, it may be something big, it may be something small. As long as you're going for something, you're doing the right thing. So appreciate y'all for coming through. And until next time, I'll catch you. Peace.